Craig, welcome to the show.
James, it's a pleasure. Nice to get a chance to visit with you.
Yeah, I'm looking forward to this conversation, especially this week after you've published what I thought was a really, really interesting article and some, very interesting charts. You wrote about the yuan gold peg and the commitment of traders report, which is sometimes referred to in this industry in shorthand as the COT report. If you wouldn't mind, it's just kind of a broad spectrum of what you were trying to get across in that article.
Well, it's something I've been sniffing around and trying to investigate and think about now for probably good, I don't know, 6, 8 weeks. This correlation, if you want to call it that, I don't know if we can call it a peg yet. I'm not really sure what to call it. Really began to get really tight back in the middle part of June. And most gold and silver investors will recall, I mean, we made it through about 6 or 7 weeks of downside after breaking down in mid to late April. And we got to middle of June, and there was an FOMC rate hike that everybody expected. And in looking back over the previous 6 FOMC rate hikes, gold had rallied 5 of the 6 times. Last summer, gold rallied after about a 3-week lag. There was a rate hike in June of last year, and then gold bottomed out in early July and then rallied. And so all of us were thinking, okay, should be maybe a similar pattern here. And instead, after surviving the FOMC and the rate hike on Wednesday, the 13th of June, and rallying on Thursday and getting everybody's hopes up, all of a sudden the bottom dropped out. On Friday, gold was down $29 and silver was down something like 80 cents. That same day, the Chinese, the PBOC, devalued the yuan versus the dollar a significant amount. And really, gold and the yuan have been trading in tandem ever since. So it's early in the game, and we're trying to. I mean, maybe it's nothing at all. I mean, that's the thing that we have to understand. I mean, it could just be gold, silver, zinc, copper, all the rest are all just simply reacting to the same stimuli that the yuan is responding to, and that's this trade war and the increasing tariffs. And so maybe I'm just chasing ghosts when I write this stuff, but I also could see a scenario where it is the PBOC itself that is attempting to manage these global futures prices of all these commodities downward. And we know that the futures markets is what set the price these days in all of these different markets. And so if the PBOC looks at it and says, look, we can devalue in dollar terms all of these dollar prices of these commodities, and if we can do that through the futures markets and make that match the amount of devaluation we're putting on the yuan versus the dollar due to these trade wars and tariffs, well, then all of a sudden these commodities all stay the same relative price in yuan terms. And so anyway, I'm kicking all this around, James. It is such an interesting development that it's worth studying. And if there is something to it, then it has significant long-term implications. And that's why I guess here in the summer of 2018, I find myself talking about it so much.
Yeah, I saw, I think yesterday I replied to one of your tweets just discussing, obviously the yuan, since the 2008 financial crisis, China has been, pedal to the metal with their credit and exploding out their M2. The amount of currency and credit creation they've had since has blown away every other country in proportion. Obviously, they've been building out ghost cities and doing all types of infrastructure projects. So the yuan, when you look at it on like a parity basis versus the US dollar, I mean, I think I sent you a video that Ken Hoffman was interviewed. He used to be the head of Bloomberg Research in 2016, early 2016. He was talking to Daniela over at Kiko. He was discussing, at the time, this is early 2016, the yuan on a parity basis should be 15 to 20 yuan to $1. That was what he was saying back then. And I went and looked at the M2 chart yesterday. It's up 28% since that interview. So now we're talking 20 yuan, 25 yuan to $1. And, that's crazy because the yuan obviously is sitting, I don't know, around 7 roughly. So you're talking, you're talking about an extreme difference in terms of M2 and all that. And of course, people would argue, most of that yuan, if they do devalue extremely hard, it'll be mostly on their citizens because the yuan is not really an international currency, as we all know. I mean, there's been a lot of hype about what it could be someday, but it's still very tiny in terms of international trade. So looking at the theory, it made a lot of sense in the sense if they're going to devalue, and of course, if they devalue very strongly, their citizens will not be extremely happy. But if they're doing something along this line, it kind of makes sense that they may be devaluing to kind of soften the blow by lowering the price of commodities in U.S. dollar terms. So I'm not saying it is happening indeed, but these charts were very, very interesting, and I thought, it does make a little bit of sense if they continue to devalue that this may be the process in which they do it.
Yeah, and that's what makes it all worth considering. Mm-hmm. And I should say this isn't the first time that we've seen gold tracking a currency pair. Mm-hmm. You can go back to about the time of the financial crisis. Gold started to track very closely the dollar yen. Mm-hmm. And we figured this out and noticed it first when the dollar really started to soar in 2014. And I started writing about it. Geez, it's almost 4 years ago. Mm-hmm. And it was about in 2012 when the gold price and the dollar yen began trading almost tick for tick. And by 2014 and 2015 and 16, this was about one of the things I talked about all the time, that I really wasn't even a gold analyst anymore. I was like a Forex analyst because that seemed to drive everything. And you'd see it anytime there was news, anytime there was an employment report or a FOMC Fed line, the dollar yen would instantly respond and gold would move in the exact same way, and it was almost tick for tick. Well, the curious thing that we noticed, and it was really early this year, it was about at the end of January, that whole correlation seemed to not dissolve, but it definitely lost its tick for tick basis. And so again, now some would look at that and say, see, all correlations work until they don't. And so maybe it was just random to begin with. But, like I said, you can pull up a chart and plot the two together and show that beginning with the financial crisis in 2008, this worked for the better part of almost 10 years. And so I'm not sure that it was just coincident. But what's weird is that really started to break down in January. And that's about the time this yuan thing really began to take over. So I don't know. Again, we've got to figure out whether it's a real thing or whether, we're just noticing a bunch of things that are moving in the same direction. But the idea that, one, and again, we'll put this in this basis, the U.S. has attempted to label or considered labeling the Chinese as a currency manipulator for years because of the yuan dollar peg. Mm-hmm. Falsely finding a level between those two currencies. And so the Chinese, as you mentioned, being up against maybe needing or wanting to do a devaluation anyway. Mm-hmm. And then they see these tariffs coming down the road and a trade war and everything else. And I've seen a lot of people write in, kind of a coincident to all of this stuff, that to fight against the U.S. and President Trump and everything else with this trade war and tariffs, that if they could just devalue the yuan at the same versus the dollar in the same amount of these tariffs that they kick in, that somehow it's a wash. Mm-hmm. So again, you put all this back together and you think, okay, well, I can see where that makes sense, and so therefore I can see why they've devalued the yuan 8% since April. Mm-hmm. And you start thinking, as you said, how much farther might they devalue in the months ahead if these tariffs really get going? And then you start thinking, well, hell's bells. If they are now acting all over the globe, they being the PBOC, to paper short all these metals to try to bring the prices down a commensurate amount, well then, geez, if a further yuan devaluation is going to, how does that not knock the metals prices back further? And that's, again, I guess at the end of the day, that's why we got to be thinking about all this stuff.
Right. And it's really counterintuitive to the mantra that's been going on for years, in the sense that, China has been actively acquiring physical gold very aggressively since 2009. In 2015, when the price got down to 1050, I think that was their largest import in physical gold at the time. And so the growing mantra was, yeah, obviously the gold price has been kind of stagnant since 2011, but China's got our back. They're the China put, essentially. Long term, China's buying all this gold for a reason. And at some point, the price of gold will go up as China starts to, gain more share in the currency market and in the world. I mean, their economy is second only to the United States in size, and they obviously have more people, and they're growing. They're an emerging country, so the concept was they would be pro gold price, right? So this totally kind of flies in the face of that. So I'm sure there'll be people out there, who are not happy about this idea that they would be slowly dropping the commodities prices in order to soften the devaluation of the yuan.
But James, I mean, again, another way you could look at it is, if over time China has been using their U.S. dollar reserves, which obviously are in the $1 trillion level, to exchange that for gold, well, they're very likely any gold that they're importing doing it with dollars, right? So if you are devaluing the yuan versus the dollar, you are going to be able to buy less gold, right?
Correct.
I mean, if the dollar price hangs in there, it's like if you go to Europe, if the dollar is weakening and the euro is soaring and you go to Europe, your trip is more expensive. You know what I mean? You always hear those kind of stories.
Sure.
And so you look and they could very easily, again, be saying, we want to continue acquiring gold. We want to continue acquiring copper, zinc, all these other metals, which are all falling, kind of like gold. We want to continue acquiring them at the same rate that we have been, in the same kind of exchange rate that we have been. And so therefore, we're going to act to, in the futures markets to try to depress price. Again, like I said, I may be grasping at straws. I mean, I'm open to anybody to say, nah, that's crazy. That's not how it works.
Right.
I'm just trying to make some sense of what appears so obvious on my screen every day.
Right. No, I get it.
That the gold and yuan are pegged.
All right. You did write, I was just, perusing your website, tfmetalsreport.com. I saw you had a vault post about the positive possible aspects of the upside of a yuan gold peg. If you don't mind, I know people who are listening are not subscribers of your report, but if you don't mind giving us maybe some tidbits as to what you were getting across in that vault report that you had behind the curtain.
Sure. I mean, this is just further speculation, right? I mean, I write a post every morning for my subscribers. I mean, it's a whopping $12 a month, so it's not like a deal breaker if you want to read this stuff. And then we record a podcast every afternoon, and usually we are kind of on top of the situation and writing about events and talking about events that occurred that day or looking forward to the next day, that kind of stuff that are going to impact price and projecting where price is going to head. But yesterday I thought, well, I had just written this article that you mentioned about the PEG and whether you can find hints of the PEG in the Commitment of Traders report. And so I was kind of working this through my mind when I wrote this post yesterday. And it was about, okay, well, what if we take this all the way to the end game? What would happen? You mentioned, should the Chinese offer some massive devaluation? People have said that for years. I mean, they've devalued 8% in the last 90 days, but people have said they should really need to devalue 30% or 40%. Or what did you imply? What do those numbers imply that you quoted earlier, like 70%?
Right. Those numbers are very large. They're like 1933 type devaluations.
Yeah. Okay. So what if, I mean, we don't go that far, but what if this does continue? What if the trade wars are unsolvable and all this kind of stuff, and China does ultimately devalue over time by 30 or 40% versus a dollar? And this peg continues. What's going to happen to the gold price? And that's what led to this thought experiment. Because if you go back in 2015, there were already these stresses. I mean, you mentioned Ken Hoffman earlier. Remember, he was as early as 2013 he was on Bloomberg talking about the vaults of London being empty. Remember that? Anybody can maybe search that on YouTube, that link.
I think the bigger story than the decline of gold is what's actually happened to the gold. You could go into a vault in London a couple of years ago and they were packed to the rafters with gold, and the gold would trade from me to you to somebody else. You can walk in those vaults today and they're virtually empty. All that gold has been transferred out of London, 26 million ounces. It's gone to Switzerland where it's been recast into a higher grade and shipped off to Hong Kong and then into China, never to return. So the most interesting thing, especially as we look into 2014, is if there ever is interest in gold again, I'm not saying there is or isn't, that gold is just not there anymore. It's really amazing. They're building these 2,000 metric ton vaults for gold all over Asia. And the Chinese, they don't want to have U.S. dollars anymore. They want to have gold.
You know, how you walk through the vaults, and, you know, what used to be, 26 million ounces is now, completely gone. And it was like big news, where to go. And then we all figured it out that it was all being exported to Switzerland, where it was all being refined and recast into kilo bars and being shipped off to Hong Kong and points east, and how the banks were living off of flow and not stock. And all of this kind of culminated in 2015, and GOFO rates fell through the floor, which were indicative of incredible physical tightness, to the point where the LBMA stopped printing GOFO rates, right? After 25 years, they just thought, well, we're not going to print this anymore. Which is another sign that something, we're right at kind of a physical breaking point in 2015. Price was down around 1050, silver was around 14. And in looking back, we started to call it a physical floor, that the paper price had been driven as low as the physical market could support it. And thus, for the physical market, couldn't take it any further down. And so therefore, the paper price had to recover, or you risk this disconnect in the whole system, where the paper price kept falling, but the physical price didn't. And, the whole thing was going to blow to pieces, and thus we had this huge rally in the first part of 2016. Okay, anyway, with that bit of history in mind, then you start thinking, okay, well, if Chinese devalue by 20 or 30%, if in fact there's this peg that's being applied by the PBOC, and if the Chinese ultimately devalue by 30%, not just 8%, how low is the gold price going to go? And if they keep shorting it to keep driving that futures price down, are they going to break the market? Are they going to take it past the point that we apparently got to in 2015? And that's what I was writing about yesterday, because do you really think, if this is actually the case, and the Chinese are doing this for their own, selfish reasons, if you will, do you think the Chinese really give a damn? If the banks in London can't source physical metal at $900, do you think they give a shit if they're putting mining companies out of business? I mean, already the earnings reports of Barrick and Gold Corp and the major producers were horrible for the last quarter. They're already getting crushed at $1,300. How are they going to produce any gold at all at $900 if that's where price heads because of all these devaluations? And so anyway, the silver lining of it all was, what if we take this all to the logical end? And China completely has control of the gold market. They devalue their currency, and they slam the gold price down to triple digits, and the whole system blows apart. The banks in London don't have any physical metal at that point to supply out to the market where people are looking for physical, and maybe that ultimately brings about that end game, James, that you and I have been thinking about and writing about for a decade, where there are delivery demands that aren't met, and people begin to realize that the music is stopped and the unallocated accounts aren't filled, and the whole system blows apart. Well, maybe that would benefit China too. Maybe China at that point steps forward and says, you know what, we don't just have 2,000 metric tons, we have 20. And as the system blows apart and we start looking for an actual physical price, maybe that takes us to the point where we've all talked about, with China backing yuan with gold and everything else. So anyway, it was just kind of a thought experiment on a Wednesday morning for everybody on my site. But it's something that, if this is a phenomenon, if this is ongoing, as it appears to be, when you pull up any chart showing the yuan and gold, you start thinking, well, where could this head? And I invite everybody to ponder that.
Yeah, it's certainly interesting. I think there's a lot going on, obviously, and there's so much behind the scenes. We do not know what's going on as far as central banks, coordinating. Obviously, they work together. The CME allows central banks to trade in the commodities markets. It never gets reported in the mainstream press. Of course, they get to trade in stocks, ETFs, all that stuff. They're buying bonds,
Right.
et cetera, et cetera. But they're literally trading in the futures markets, and that is the price discovery mechanism of real things in the real world. And so, Lord knows what volumes they're doing it at, and who is, and et cetera, and what the motives are. But obviously, this is just another thing to be keep an eye on in the short term. I suppose just to kind of wrap it up, you and I personally have been working in this industry probably since 2008. Probably were investing in it a little bit earlier than that. I wanted to ask you just on a personal level, how did you get involved in this industry? And what was the impetus that got you started down precious metals route?
It was 100% by accident, James.
Yeah.
It was not like some brilliant business idea that I had.
No.
I had started a business in the I guess the wake of the financial crisis, and I was coming out of the securities industry. I'd worked as a stockbroker. I'd worked as what's called a wholesaler. I'd been involved. I had all my Series 6, 7, 65, all these different licenses, and I was trying to start my own business that way. And I'm watching the fallout of 2008 and 2009 and trying to make this happen. And one thing I learned is that you never have enough capital. Businesses are always more capital intensive than you really think they are. And so as I'm watching this business of mine fail for lack of capital, I'm spending time watching with a critical eye, more critical than I ever have in my life, CNBC and Bloomberg and the rest. And I'm like, they're reporting things that's just not accurate. That's not this is just not right.
Right.
And at about that same time, I had this kind of epiphany. I read The Big Short, the book, and I went, whoa, wait a second, what's going on here? And then I also found Zero Hedge, which at the time was this infant site that was on Blogspot.
Right. Right.
That's how small Zero Hedge was. And all this kind of came together, and I signed up as a member, if you will, at Zero Hedge, and I was trading options in my own account because, well, I was trying to make money any way I could, and I was trading gold and silver options. This would be 2009, and I mean anybody that's ever traded gold and silver, whether they're options or GLD or anything. It does not take long for you to figure out what is going on. This is not like any other market in the world. I mean, pretty quick you figure out that something's pretty screwed up with how these things trade. And I started putting the dots together and connecting things, and I realized, that the banks were in control of the price. And I started writing about that on Zero Hedge and started being able to pretty accurately predict where price was headed in the short term, up and down, based on anticipating how the banks are going to act. I got a following at Zero Hedge. People said, you should start your own blog. And I thought that was crazy. Who would want to read what I write? And then one day my wife suggested that I do it. And the timing couldn't have been better. That was November 2010. And the thing just absolutely exploded. It morphed into TF Metals Report. And we've been at it now for, oh my gosh, almost 8 years. And I personally, look like first took office, and they look like young guys, fit, full of life. And then by the time they leave office, they look like death. That's what's happened to me. That's what's happened to me over the last 8 years. But we keep fighting the fight. And look, the math is what it is.
Right.
These banks, you said they all work together, and they've done I don't want to say an amazing job because there's so much deceit involved. But the political, financial, media complex has done such an amazing job of holding it all together for the last 8 years and keeping the plate spinning. But the math is what it is. I mean, the U.S. is still going to borrow $1.3 trillion this year.
That's what I always lean back on is, all these small things that we talked about. I mean, even this Chinese yuan peg stuff. I mean, in the end, it's the U.S. I just look at it. We're standing in a situation where we have hundreds of trillions of dollars of unfunded liabilities. And both the yuan and the US dollar are going to have to devalue at some point. Against what? Right? I mean, that's ultimately that's the big thing. And how long can these plates spin until they start dropping? And what happens when they start dropping? Probably a pretty ugly chain reaction, similar to 2008-9. But, they pressed timeout. They hit the timeout button then. They pumped the financial markets full of trillions of dollars, and it's grown this bubble that we currently have in virtually every other financial class other than precious metals.
Yeah, exactly. They've been able to postpone this far longer than I ever thought. Mm-hmm. I mean, I remember doing interviews in 2011 and 12 going, I can't believe they've kept it together this long.
Yeah.
And so the temptation is to think, well, they've kept it together for 8 or 9 years, so now everything's fine. And no. All the bad stuff is still on the books. They've just printed all these trillions and trillions of dollar and euro and yen to try to paper everything over. No greater collapse is still out there. And so that's why it's still worth writing about. That's why it's still worth talking about.
Right.
And that's why guys like you and I and silver doctors and everybody else will continue fighting the fight to try to warn as many people as possible to not get complacent, to not think that, everything's just fine.
Right.
And, to still continue to prepare by prudently allocating at least some of your assets to physical metal.